All right, stocks rebounding with a vengeance. Paul Dietrich says stocks are looking better than they have in the past 10 years. He said this would happen yesterday. He's Chairman CEO of Foxwell Capital Management. What do you see from here, Paul?
Well, I think this is one of the greatest buying opportunities since October 9th, 2009, the last bottom of the market. People have got to stop investing based on emotion and political noise. I know that that does affect the market sometimes, but if you want to understand the long-term trends in the stock market, you have to look at earnings. And the fundamentals of the stock market have never looked better. I mean, you got PE ratios that are bargain basement prices for some of the greatest blue chip companies in the world. Productivity is at historic highs. Got 2.2 trillion of cash on
But what are some of those
sheets.
greatest companies in the world that intrigue you or that have gotten beaten down a lot?
Well, I think it's the boring blue chip companies, and especially those in the consumer sector. Those are just great. And I actually believe that everybody's talking about the consumer slowdown because there have been some weak economic reports that are basically 2 or 3 months old. And I think they were accurate, but we've hit a bottom now in consumer spending. And I'm looking at indicators right now that are showing that consumer spending is rebounding. I mean, we saw General Motors 37%
but I mean, the latest
increases.
reads from retail stores, now these are volatile, as you correctly point out, is that it has slowed, and maybe the last couple of weeks really slowed, given all the dynamics. You don't worry about that.
No, I'm actually not sure that that's correct. I'm seeing state and local sales taxes going up 4.7%. You look at Costco, Walmart's, all of their growth last month or last quarter.
So this trend is our friend. This trend is over. What do you see then for the Dow, for the S&P, the NASDAQ? What are you looking at?
I believe that earnings, even though they've been pulled back a bit by analysts, are going to be up 18% for this year. And I believe that by the end of this year, we're going to see double-digit growth in the stock market.
What if the Fed is right that this slowdown is a 2-year phenomenon, and that's why it's keeping rates low? If it's acknowledging the fact that this recovery is at best tepid, could you still have a good environment for stocks in that?
Yeah, I think we have to stop looking at the economy and equating it with the stock market. Right now, 50% of all the profits of S&P 500 companies are coming from very high growth Asian and emerging markets. And so the stock exchange in the United States no longer represents the underlying U.S. economy. We represent as much of what's going on in Asia and emerging markets as we do here in the U.S.
All right. Good stuff all, Paul. Thank you very much. Paul Dietrich.